Welcome to Talk Tickers, where we break down the earnings calls that are moving the markets. Today, we're jumping into Novartis's Q3 2025 results. All right, so let's get right into it. This stock got hammered. We're talking a drop of over 4% right after they reported. So the big question is, what on earth happened? On the surface, this looked like a pretty good quarter. Why the punishment? Well, we're going to unpack that right now. The immediate reaction from Wall Street was, well, not good. It's really a classic case of the market getting hyper-focused on a couple of headline numbers, and in the process, completely missing a much bigger, much more positive story about the company's real underlying growth. And this quarter's story really boils down to this conflict, right? A tale of two numbers, what they brought in at the top and what they kept at the bottom. This created a really mixed signal for investors, especially those just scanning the headlines before the market opened. Okay, and here's the heart of the matter. You've got this tug of war going on. On one hand, revenue, a solid beat. They brought in $13.91 billion when the street was looking for a little less. Great. But on the other hand, core EPS, that came in at $2.25. Just a 2-cent miss. But in this kind of market, even a tiny miss like that is all investors needed to see to hit the sell button. So really, the market zeroed in on two things. First, that small earnings miss we just talked about, and second, the generic competition for their big heart failure drug, Entresto. Now, this was expected, but it was still a headwind, and traders just ran with those two facts, completely ignoring the powerhouse story management was trying to tell. Which brings us to management's side of the story. While everyone else was fretting about patent cliffs, the company was pointing to this incredible portfolio of 4 drugs. They're 4 pillars that are just driving massive sustainable growth. First up, you've got Kisqali. This breast cancer drug is on an absolute tear. We're talking 68% year-over-year growth. It's not just growing, it's really cementing itself as a leader in its market. Just incredible momentum. Next, let's look at Kesimpta. This is their multiple sclerosis drug. It put up really robust 44% growth. And what's important here is that this isn't some accounting trick. It's being driven by pure strong demand from patients and doctors in the US and around the world. And rounding out this growth engine, you've got a couple of real accelerators. First, there's Pluvicto, their radioligand therapy. Think of it as a super targeted radiation treatment. That grew 45%. And then you have Scemblix for leukemia, which almost doubled with 95% growth. I mean, wow. These are the kinds of numbers that really form the core of the bull case for Novartis. And here's the punchline. The CEO, Vas Narasimhan, basically said, look, these 4 brands are the real story here. Together, they grew at a combined 35%. That's more than enough firepower to get the company through the generic competition that had the market so spooked. So beyond just the sales numbers for this quarter, management made it super clear that their eyes are on the future. They're using smart acquisitions and big pipeline wins to build a business that's going to last for the next decade. And they weren't just talking, they were doing. This quarter was packed. You had the massive, roughly $12 billion deal for Avidity Biosciences, which pulls them into the really exciting field of RNA-targeting drugs. On top of that, they got a key FDA approval for Rhapsido, plus a whole slate of positive late-stage clinical data. They are absolutely executing on their strategy. And this quote from the CEO on the earnings call just says it all, doesn't it? It perfectly captures that disconnect. Management is seeing this powerful, long-term growth story driven by their new innovations. But the market, well, at least on day one, it just saw a headline miss. Okay, so let's put it all together. You've got the market's cautious reaction on one side and management's clear, strategic execution on the other. So where does that leave us? Here's our forward-looking take and our call on Novartis. So we're going to break this down into 3 simple parts for you. First, our prediction for what to watch for in the next quarter. Second, what we think the stock price is likely to do. And finally, our official equity research style rating on NBS. So for Q4, listen, management told us to expect pretty muted headline growth. Why? Well, they're going up against a really tough comparison from last year, so that makes sense. The real thing to watch, though, is the performance of those 4 pillars. That's the engine. And the story's going to remain the same. Can this new growth fully outrun the old generic erosion? That's the main event. So what's the stock going to do? Well, in the short term, I'd expect more of this choppiness. It'll probably be stuck in a range for a bit. The market just needs more proof that these new drugs can carry the weight. What's the catalyst to send it higher? It's simple. more good news from their pipeline, and most importantly, a couple of clean beat and raise quarters to build back that confidence. And that brings us to our final reading. We're calling this a market perform. Look, the company is doing a fantastic job navigating a major transition, and that growth portfolio is seriously impressive. But the overhang from generics is real, and the stock isn't exactly cheap at these levels. So for us, that combination means a neutral wait-and-see approach makes the most sense right now. This is not financial advice.